Hi, I'm Steve Spencer from SMB Capital, and today we're going to talk about trading on a Fed day. Fed days can be very profitable days for short-term traders, and there's a few things that we look for, and I'm going to kind of walk you through those things and then kind of show a couple of trades that I made on the most recent Fed day in June. So here are the things that we look at on Fed days. Number one, it is really about price action. As short-term traders, that really is driving force of the trading that we're doing. And on Fed days in particular, once the announcement comes out at 2 p.m., quite often we'll see momentum. And short-term traders, the most popular trade is to pile in to the momentum. So we'll take a look at that in a moment, and a couple of other points to be made. Prior to the Fed announcement, the market will be completely dead most times. I mean, sometimes it'll grind higher into the announcement, or it'll grind lower into the announcement, and then reverse itself once the announcement comes out. But what we want to do is take note of what the market is doing prior to the announcement for the first, 4.5 hours of the trading day, and kind of see if some very clear support or resistance levels have established themselves, and then we can use those later. The other thing that we want to do is understand the market conditions in context. Very important multi-day support and resistance levels. As short-term traders, these are always extremely important to us to understand, because we want to know context. If the market seems like it has momentum, but it's moving into a multi-day support or resistance, we want to understand that there's a good chance it could reverse from that area, and we want to be prepared for that. So let's take a look at a few charts. The first one we're going to look at is the SPY chart, the multi-day. And what we know is, coming into this particular Fed announcement, the market had been selling off for about a week. And what I kind of outlined for you there was, we broke down through key support a few days ago below 209. We had actually bottomed out the day before the Fed announcement at 207, and we gapped higher, and we were just consolidating all day right below 209. In fact, if we zoom in on the intraday chart of the SPY, we can see this very clearly. In the morning, we failed right below 209, and then in the afternoon, right when the Fed announcement happened, we actually spiked right above there. But from our perspective, we want to understand that the multi-day trend was down. We know that 209 had been huge support for the prior month, and we'd finally closed below it. So one of the things to actually look for when the Fed announcement came out was, would we quickly spike into that resistance and fail? And if we did, that would be a nice entry on the short side. So that's the first trade. That's actually the trade that I made right after the Fed announcement. That right circle area that I where you can see where we spiked above 209 on the first SPY intraday view, and got short there. And then what I wanted to see was what would happen when we came into the clear support. It was support in the morning, it was support in the middle of the day. What would happen there? And you can see we came into it and we bounced off of it. And then right at the end of the day, when we moved below, there was a momentum trade. Now, I didn't take that trade in the SPY, but that's the most popular trade on the desk. I was already short. I wanted to see how we would move through. The way that you would trade that is, when we broke below the morning and the afternoon support, is because the SPY is so liquid, you can pretty much pile in with as much as you want. So some traders, smaller traders, might be in for 1,000 or 2,000 shares, but even larger traders can hit 30,000, 40,000 shares or more. SPY is incredibly liquid. And when they hit that, make that momentum trade as it breaks that all-day support, what they're basically doing is putting in a stop a little bit higher, probably above 208.50, at most above 208.60, and they're looking to make 50 cents to $1. That's it, it's pure momentum. On IWM, another index, small caps, let's take a look at the multi-day chart. And what we can see is, same thing was in a downtrend as well. Similar to the SPY had bottomed a day earlier. In this case, it was around 113.70 or so. And when we came in on the day of the Fed, if we look at the intraday view, we can see that all day it basically couldn't get above 115.5. So basically, it was looking at the same trade after the Fed announcement. What happens when the announcement occurs? Does it actually fail at that resistance we saw all day? And in fact, you can see there was a little bit of a wick, a spike right above there, and then the offers came back. I basically just got short. I put in a stop 10 cents higher, walked away, and you can see it pulled back in about a half a point or so. And then later in the day, when it retraced back up, there is nothing wrong. There's nothing wrong with shorting into that morning and afternoon resistance. To me, this one was not so clear as a momentum short at the end of the day. If we go back and look at the SPY and compare this intraday to the SPY intraday, what we saw in the SPY intraday is all day, it had in the morning, in the middle of the day, right before the announcement, right after the announcement, very clearly 208.50, there was support there. And then when it broke through, that's a momentum trade you want to take. It didn't line up as well in the IWM. So IWM was more about fading the morning resistance. So those are basically the two big trades, either fading support or resistance, or a momentum trade, momentum being the most popular because you can really just pile in and take advantage of the fact that everyone's pushing in the same direction. But you're going to look for smaller gains in the momentum trade. You might look for your quick 30 to 50 cents, at most $1. With the shorting at resistance, which I did, you can look for that bigger move and take it into a swing trade, which I did overnight in IWM. Hope you learned something. Thanks.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself, invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium, how good can you be?